Today we will be dealing with chapter 9, and many of your questions we have asked through your mails. Chapter is about international trends in insurance regulations. We will be discussing why regulations are required, what are the area of regulations, and various international organizations involved in insurance regulations. Why regulations are required? You know that insurance is for security and it involves money. If money is not properly utilized and spent in speculation, etc., the purpose of insurance is lost. So there is requirement of regulation to see that policyholders' money is to be utilized in proper manner and given to policyholders in the event of any unfortunate incident of accidents giving rise to claim. So as insurance companies deal with money, that is to be regulated. If it is not managed properly, unregulated insurer may take advantage of policyholders. They collect premium from them but don't pay the claim when the time arises. This was the situation prior to nationalization of life insurance in India in 1956. Similarly, prior to nationalization of general insurance in 1972 and 73. So the situations are such that premiums were collected but claims were not paid. They were rejected on fancy grounds. So government thought of nationalizing sector and regulating it properly. So nationalization in India took place mainly because of improper working of insurance companies. Then we saw yesterday that every insurance company earns main income out of investments. Underwriting profit or profit out of pure insurance operations is generally very much less, but insurance premium is collected today. Claims, if paid, will be paid in future. So during these 2 days, investments are made, and out of that, whatever income is generated, that is main profit of any insurance company in the world. So if insurance companies go in for high risk investments, speculative investments, more in stock exchange or securities which are appearing attractive but they are not so, so they may give rise to losing of money, and as we saw that insurance involves security of policyholders' money, so they are to be regulated. It had happened some years before in Japan. Japanese insurance companies promised high returns for life insurance companies, and to pay high returns, they speculated heavily in stock exchange. Many companies went bankrupt, and finally, policyholders had to suffer. Though Japan is regulated market, they were not regulated properly. Then there are complicated terms and procedures of insurance. Many legal terms are used, technical jargons are used, procedures, etc. are also very cumbersome, highly technical. So if they are not simplified, insurance company can take advantage of these complicated terms and procedures to avoid the claims, avoid the liabilities. That's why regulator will try to simplify the things by various regulations. Generally, regulators work through different type of operations. Main functioning of regulator is to licensing of insurance companies, intermediaries like agents, brokers, corporate agents, etc. So they try to control the licensing so that only qualified and people who are professional are entering only the field. People who want to make money or speculate are not allowed in this field, and this is controlled by regulators' licensing system. Second part is management of fund. Management of fund or investment we saw is major activity for insurance company. It is generating main profit for them. So for management of these funds are to be properly regulated, and for that there should be different types of proper regulations changing with the requirement of the market and requirement of the economy. Then most important thing for any regulator is to see that all insurance companies are working in a viable atmosphere. They should not do cutthroat competition in such a manner that the premiums are less, claims are much more. So a time should not come when insurance companies go bankrupt and they close down. That's why regulator has to see that insurance companies remain financially viable. They can remain financially viable if their assets are much more than liabilities. So there should be control over liabilities. At the same time, it is to be seen that assets value increases so that in the worst scenario, assets are sufficient enough to pay for all the liabilities. And this is called financial solvency. And in India, the ratio required is 1.5 generally. So assets should be 50% more than the liabilities. Then, as we saw that technical jargons, complicated insurance policy wording, difficult procedures, all this create problems for policyholders and insuring public. So the regulator will also try to standardize insurance products and see that technical jargons are minimized, procedure, etc. is simplified. Pricing of insurance product is very important because it generates premium and out of premium claims are to be paid. If price is very much less, premiums are lesser, then fund is not enough to pay for the claims, or if price is very high, then also insuring public is paying more than the required. So balance is to be kept between price and the claim, premium and the claims. So that can be done by regulator. Now, creating level playing field. In many countries like India, companies are working in public sector as well as private sector. They are competing with each other. So regulator has to see that either public sector or private sector are not having undue advantage and all are having equal opportunity to expand their business. Then monitoring of reinsurance is very important because every insurance company working in any country depends upon reinsurance, and if reinsurance company selection is not proper or proper reinsurance is not done, then also problems are bound to be there. Or if everything is transferred to reinsurance company, then purpose of doing insurance business is defeated. So regulator has also to see that maximum premium remains in India or remains in country, and whatever is going out to companies which are financially sound and professional enough to pay for claims under reinsurance policies. There are certain organizations working in international market which are taking care of various regulatory aspects. The most important is International Association of Insurance Supervisors. As the name suggests, it is an international organization. It looks after interaction among the insurance supervisors and professionals. It is a main forum for meeting all the regulators and exchanging views on regulations and forming different types of regulations required for the economy or particular type of country. Then FSA, Financial Service Authority, is in UK. Then NAIC is in USA, National Association of Insurance Commissioners. It is apex body of various states in USA, and it takes care of all the states' regulatory matters. APRA is in Australia, Australian Prudential Regulatory Authority. Then FSA in Japan, Financial Services Authority. After bursting of life insurance companies bubble, they have become more active. BNM is in Malaysia, Bank Negara, Malaysia. It is Malaysian insurance regulator. And IRDA in India, you know about IRDA, Insurance Regulatory and Development Authority. IRDA is, in addition to regulator, a developing authority also. It has to see that concentration of general and life, both insurances, increases in India. Penetration also increases in India. IASIE and ABI, Insurance Association for study of insurance economies. This is called Geneva Association. It is non-profit organization involved in research and important improvement of insurance in all activities. It consists 80 members from Europe, North America, South America, Asia, Africa and Australia. ABI is Insurance Association of British Insurers. It is self-regulatory organization like insurance councils operating in India. We saw about IAIS, International Association of Insurance Supervisors. It started in 1994. It is body which consolidates all insurance regulators, creates commonly accepted standards so that worldwide insurance standards are more or less identical. It is also involved in publication, training, arranging meetings of various regulators, conducting seminars on insurance regulations, etc. It works in coordination with other financial bodies, associations and group, because insurance cannot work in isolation. It should have coordination with other financial groups and bodies also. IAIS represents insurance regulators and supervisors of more than 200 jurisdictions in nearly 140 countries, and it controls 97% of world's insurance premium. It has also more than 130 institutions or persons as observers. The aim is to promote effective and globally consistent supervision of insurance industry in order to develop and maintain fair, safe and stable insurance markets for benefit and protection of policyholders and to contribute to global financial stability. The main aim is global financial stability by various regulations. So we saw need of insurance regulations, the area of insurance regulations, and international organization working in world which are connected with regulations and similar things. Now, second part we will see annexes about RTI, Right to Information Act, and IAIS guidelines on grievance redressals. Many of the guidelines we have discussed yesterday, and today we will be discussing some additional guidelines. RTI is the Right to Information Act. Under the Act, it was formed in 2005. Public authorities have to give information to citizens and to promote transparency and accountability. So it involves all government departments, including public sector insurance company and IRDA. So in other words, private insurance companies in India are not governed by this Act. So it is not possible to get information under this Act from private insurance companies and other bodies which are not government organization and not working under government supervision, direct supervision. Every body should have chief information officer to deal with the request for information. The officer should be at least at middle management level. Certain classified information need not be given, which is very confidential, may endanger the working of country or working of economy, so that can be omitted from sharing with public, but general information and information which are related to day-to-day decisions, etc., can be given to or shared with the insurance company, shared with member of public. In case of insurance companies, the information about charging of premium guidelines, then claim settlement, information about particular claim or particular decision on claims, etc., can be shared with public to be more transparent. IAIS and other public sector insurance company have to provide this information. IAIS website generally gives enough information on their working, so that a website is active. But still, if somebody wants further information, he or she can approach them for information under RTI Act. Procedure is very simple. 10 rupee fees is to be paid along with application on plain paper, and after receiving the application, within 30 days, the authority has to provide the information. If any documents are to be given, then rupees 2 per page is to be charged for A4 size. If pages are bigger, then actual cost of copying is to be paid by the applicant. If some inspection or some document is required, some register is required, then inspection charges can also be paid, should also be paid, and they are for first hour nothing, thereafter rupees 5 for every 15 minutes, or rupees 50 if CD is demanded of the information per CD. Compact disc can be charged. Information affecting solvency of state is prohibited by, which is prohibited by courts, etc., can be denied by these undertakings. In the event of non-sharing of information or delay in giving information, appeal can be made to appellant authority prescribed under the Act. And if further appeal is required, it should go to Central Information Commissioner. Information about working of organization or actions taken, not taken by them, is to be shared with member of public on application. Now, second part we will see IADA guidelines about grievance redressal. Yesterday we saw major part. Today remaining points we will see. Every insurer should have system of receiving, registering, and disposing of grievance in each office. Grievance about policy matters to be laid down, the process and turnaround time also is to be decided. Wherever any grievance is received, it should be acknowledged within 3 days with the name of dealing officer who will be dealing with the complaint or grievance, his designation, and what will be procedure to be followed. And if complaint is sorted out within 3 days, then along with acknowledgement, the dealing officer should state that the complaint has been resolved. If it is not resolved within 3 days, then time limit is 2 weeks. And if further information is required to be given for further process, that is to be informed to the person who has approached the authority. And after 8 weeks, no further information is asked for by the complainant, then case is to be taken as closed. When complaint can be closed? If information asked for is given, if complaint is withdrawn by complainant, if grievance is settled by the dealing officer or in any other manner, and no response for reply given by insurance company is received within 8 weeks time. In such cases, grievance redressal officer will certify that complaint has been closed and he will inform IRD accordingly. For handling of grievances and complaints, IRD has suggested that proper software should be used. So they have to install required software, and periodic reporting is to be done to IRD online. System also required for handling of calls, emails, voicemails, and it should be integrated with IRDA system of grievance redressals. Insurers to publish procedure on website and wherever possible in their policy documents also. Then every insurance company should have policyholder protection committee. We also saw yesterday that IRDA is having integrated grievance management system which is operated online. It is online registration of grievances, and when it is coordinated with insurance companies system, the grievances can be handled in faster way. But every complainant has to first approach insurance company, and if complaint is not cleared by them, grievance is not redressed by them or delayed, then he can approach IRDA. The system, as I told you, monitors grievances with insurers on day-to-day basis. So we saw main provisions of RTI Act, Right to Information Act 2005, procedure and IRDA guidelines on grievance redressal and IGMS. With this, we are completing the syllabus on IC 14.